The broader cryptocurrency market just experienced short-term recovery after Ethereum climbed from $3,404 to $3,533 in 24 hours, lifting sentiment across altcoins and creating conditions where quality setups can materialize. Jasmy coin emerged from this recovery showing a technical structure that seasoned traders recognize immediately. The power of 3PATTERN. Currently trading at $0.0097, Jasmy's gains remain modest. This isn't about celebrating pumps, it's about identifying patterns before they complete. The 2-hour chart reveals a 3-phase structure that mirrors institutional accumulation and distribution playbooks, used across traditional and crypto markets for decades. The power of 3 isn't mystical or subjective, it's mechanical pattern recognition based on how large capital operates when building positions without moving price against themselves. The 3 phases, accumulation, manipulation, expansion, represent the strategic approach institutions use to enter positions efficiently, shake out competing holders, then drive price toward targets after securing favorable positioning. For Jasmy, each phase is clearly identifiable on the chart, which is rare. Most patterns are ambiguous or incomplete. When all 3 phases form with textbook clarity, probability shifts dramatically toward pattern completion. That's where Jasmy sits now. 2 phases complete, 3rd phase potentially initiating. Understanding what happened in accumulation and manipulation phases provides the context for recognizing whether expansion phase activates or the pattern fails. Let's dissect each phase chronologically to understand the institutional footprint embedded in recent price action. The accumulation phase occurred between 0.010017, that's the upper boundary, and 0.00973, the lower boundary, creating a tight sideways range marked by the gray box on the 2-hour chart. This period of compressed volatility and range-bound price action is where the pattern, honestly, begins. Why does accumulation look like this? Well, it's because large capital can't buy aggressively without driving price higher against themselves, increasing average entry cost. Instead, they absorb selling pressure within a range, allowing impatient holders to exit, while quietly building positions at relatively stable prices. The tightness of the range, just 4.3% spread between boundaries, indicates strong price control. Sellers can't push price materially lower, with support holding at 0.00973, but buyers aren't aggressive enough to break resistance at 0.01017. This equilibrium creates the consolidation that allows accumulation without really revealing the hand being played. Volume during accumulation phases typically shows declining or moderate characteristics. Heavy volume would indicate either aggressive buying, which would reveal the play, or distribution, which is the opposite intent. Jasmy's accumulation zone demonstrated the low volatility, range-bound behavior that's really consistent with smart money positioning. The duration of accumulation matters. Extended consolidation allows more position building and creates a stronger foundation for an eventual breakout. Jasmy's accumulation lasted sufficient time to establish the range clearly, test boundaries multiple times, and allow weak hands to exit positions out of boredom or impatience. Classic accumulation behavior. So, once accumulation completes, institutions actually face a problem. Their buy orders have absorbed most of the available selling pressure in the range, but, there's still significant liquidity sitting just below support where stop losses tend to cluster. To maximize their position size before driving the price higher, which by the way gets really expensive, they need to access that liquidity. And well, that's exactly where manipulation comes into play. On November 11th, Jasmy broke down below the accumulation zone's lower boundary at 0.00973, dropping to a local low of 0.0092 before sharply reversing. This wasn't actually weakness. This was, honestly, surgical liquidity extraction. The manipulation phase really exploits predictable trader behavior. When price consolidates in a range, retail traders tend to place stop losses just below support, thinking they're managing risk smartly. Institutions know exactly where these clusters sit, below 0.00973 in this case, and yeah, they deliberately push price through that level to trigger those stops. So, what happens when stops trigger? Well, sell orders hit the market as positions get liquidated. Those sell orders in turn become buy opportunities for the institutions who, push the price down intentionally. They end up accumulating even more at better prices, like say $0.0092 instead of 0.00973, collecting liquidity from all those forced sellers and basically completing their position building before they kick off the expansion phase. Now, The key identifier when you're trying to spot manipulation versus a genuine breakdown is, honestly, the speed of the reversal. Jasmy touched 0.0092 and, almost instantly, reversed, reclaiming those higher levels really quickly. Genuine breakdowns just don't V-bottom like that. They usually grind lower, retest the breakdown levels from below, and show sustained selling pressure. Manipulation drops, on the other hand, spike down and snap right back, because that selling pressure was manufactured, not organic. This false breakdown actually achieved multiple institutional objectives at the same time. It triggered retail stop losses, which is basically liquidity harvesting, shook out weak hands who thought the pattern failed, reducing competing demand, tested the real support, strength, showing that buyers defend 0.0092 aggressively, and finally, completed accumulation at those optimal prices before the expansion. Pretty efficient, right? The speed and magnitude of the reversal from 0.0092 confirms manipulation rather than distribution. If institutions were exiting positions, price wouldn't bounce so decisively. The V-bottom structure proves accumulation continued through the manipulation phase. Before we break down the expansion phase, triggers and exact price targets, and this is where risk-reward becomes asymmetric. Smash that like button right now if this institutional pattern breakdown is connecting dots you've never seen before. Most traders get stopped out during manipulation phases and miss the expansion entirely. We're reading the footprints before the move. Subscribe and turn notifications on so you catch the follow-up when expansion confirms or invalidates. We position before patterns complete, not after. Now let's talk about what triggers expansion. Jasmy currently trades at 0.0097, positioned just below the former accumulation zone's lower boundary at 0.00973 and beneath the 50-period moving average at 0.00984. These two levels now function as immediate resistance that must reclaim to confirm expansion phase activation. The 50 moving average, or MA, specifically matters because it represents the recent average price across the past 50 periods. Trading below it, that indicates a short-term bearish structure, but if the price reclaims it, that's a signal of a momentum shift toward the bulls. Combined with reclaiming the $0.00973 accumulation zone boundary, these reclaims would confirm that the manipulation phase concluded successfully, and the expansion phase is now initiating. So, why do these levels trigger expansion? It's because reclaiming them proves that buyers have absorbed the manipulation selling, defended the $0.0092 low, and now possess enough strength to push price back into and above the accumulation range. That strength differential, from defending lows to reclaiming resistance, signals the shift from accumulation and manipulation to expansion. Once expansion activates, the measured move calculation provides objective price targets. The accumulation range height, which is 0.01017 minus 0.00973, equals 0.00044. This value is projected from the breakout point. If Jasmy reclaims 0.00973 and breaks the 50 moving average at 0.00984, then the next resistance sits near 0.01065. The previous range, high area where profit-taking may emerge. Breaking and holding above 0.01065 opens the measured move target at 0.01114. From the current price at 0.0097, that represents approximately 14% upside, the reward component of the risk-reward equation. That's the expansion phase payoff. After accumulation at controlled prices and manipulation to access additional liquidity, institutions drive price toward targets that justify the strategic positioning effort. The expansion phase typically shows increasing volume as the breakout confirms stronger momentum than consolidation phases and a sustained move toward measured targets rather than immediate rejection. If Jasmy reclaims trigger levels and these expansion characteristics confirm probability favors continuation toward 0.01114. Every pattern requires defined invalidation criteria, the level where the setup fails and the thesis changes. For Jasmy's power of 3, that invalidation sits at 0.0092, the manipulation phase low. So, why does breaking 0.0092 invalidate the pattern? Well, that low actually represented the extremity of institutional accumulation effort. If the price can't hold above that level after the manipulation reversal, it signals either accumulation wasn't sufficient to support expansion, or maybe distribution is occurring instead of accumulation, or honestly, the pattern read was just incorrect. A decisive drop below 0.0092 with sustained selling pressure would indicate the V-bottom reversal from the manipulation low was temporary, rather than the beginning of expansion. It would suggest Jasmy needs more time to complete a proper accumulation phase before attempting expansion, or that, market conditions shifted to prevent the pattern from completing. Risk management really demands respecting invalidation levels. If you're positioned long, anticipating expansion, stops have to sit below 0.0092, the defined risk 0.0097 current to 0.0092 stop, that's a 0.5% risk, against a defined reward, which is 0.0097 to 0.01114 target, or about a 14% reward, creates roughly a 28-to-1 risk-reward ratio. That's the kind of asymmetry that makes power of 3 patterns so attractive when they're identified correctly before expansion. However, traders must acknowledge pattern failure probability. Not every power of 3 completes, market conditions change, accumulation proves insufficient, or competing institutional activity disrupts the pattern. That's why, honestly, waiting for expansion confirmation, like reclaiming 0.00973 and 0.00984 before entering provides a higher probability than anticipating during manipulation or accumulation phases. If this power of 3 breakdown just gave you a complete framework for reading institutional patterns, do 2 things immediately. Subscribe so you catch follow-up coverage when expansion confirms or invalidates, and drop a comment telling me if you're positioned for Jasmy expansion, waiting for confirmation above 0.00984, or just kind of sidelined watching. Do you trade power of 3 setups? Ever been stopped out during manipulation? Comment below. I respond to pattern recognition discussion and community insights, honestly, sharpen everyone's edge. Listen, I appreciate you staying for the complete institutional pattern breakdown. Most crypto content focuses on fundamentals or hype while ignoring the price structure, revealing exactly what smart money is doing. You stayed for the 3-phase pattern analysis, which means you're learning to read institutional footprints instead of reacting to completed moves. That's how consistent positioning happens. Before you leave, I've got another video breaking down 3 altcoins showing similar accumulation patterns with manipulation phases potentially forming. If Jasmy's power of 3 setup intrigued you, those pattern analyses will provide additional recognition training. Link is in the description and on your screen right now. Remember, in crypto, institutional patterns repeat because the strategic logic behind accumulation, manipulation, and expansion remains constant. Learn to recognize the phases, wait for confirmation signals, define invalidation levels, and execute when probability aligns. Jasmy just gave us a textbook example of the first 2 phases. Whether expansion completes depends on reclaiming 0.00973 and 0.00984. Watch those levels. They determine everything. This is TJ from TJ Crypto World. Stay patient, read the footprints, and I'll see you in the next breakdown.